Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. Today we're really digging into a fascinating set of sources. They capture a pretty dramatic moment from October 2025. It's this confluence of major geopolitical tension hitting the markets hard, but also set against this backdrop of really aggressive tech development happening at the same time. We're talking about extremes here. The event that really kicked everything off was President Donald Trump's announcement, a big one, 100% tariff on China. And the key thing, the sources stress this, is that it's over and above any tariffs already in place, set to start November 1st, maybe even sooner.
Yeah, and if you were anywhere near a screen that day, you felt it immediately. The sources are calling it a minor earthquake across global finance, which feels like an understatement, frankly. Just one session, boom, $2 trillion wiped from total market value. Clean, gone.
$2 trillion.
And the legacy markets, they definitely felt it. The Dow Jones index got shattered. That's the word used. Down 800 points. The market didn't just dip, it recoiled.
And naturally, when you get that kind of, centralized political shock, the decentralized world, crypto, it feels it even harder, doesn't it?
Oh, absolutely. Tenfold.
This one announcement triggered a massive liquidation event. We're talking over $19 billion washed out of crypto. So our mission today is kind of twofold. First, let's unpack the hard numbers behind this shock. The details, who got hit, where did the money run? And second, we need to look at the other side of the coin. This powerful counter-narrative of innovation that's actually bubbling up underneath all this chaos, especially in Bitcoin and, interestingly, the Middle East. Okay, let's start with crypto, that hammer blow. The sheer scale. The raw data just screams panic selling. We saw a $19.6 billion market cap wipeout on the day of the announcement alone.
$19.6 billion.
Yeah. And some analysts are already saying this might be one of the biggest single-day liquidations ever, specifically because it wasn't like an internal crypto failure, right? It was this external geopolitical thing.
Exactly. It was a systemic cleanse, you could say. And leverage, that was the first casualty.
Oh.
Over 1.66 million traders liquidated.
1.66 million.
Yeah, totaling that $19 billion figure. But here's the really crucial context. The positions. An estimated $16.8 billion of that total. Long positions.
Ah, so people betting on prices going up.
Precisely. Leveraged bets expecting the climb to continue. They were betting on stability, essentially, and they got caught completely flat-footed by a political decision made halfway around the world.
We saw volatility just spike. Bitcoin, even after its recent all-time highs, it briefly touched $103,000 on some exchanges. That's a huge psychological level to break, even briefly. But Ethereum, our sources point out, actually took an even bigger sort of disproportionate hit, dropped all the way to $3,400 on some exchanges during the worst of it.
And you can really pinpoint where the institutions got spooked if you look at the ETF outflows.
Okay.
Total outflows hit $179.5 million right after the announcement. But here's the fascinating part, the divergence. Ethereum ETFs saw a massive $175 million pullout.
Wow, almost all of it.
Almost all of it. While Bitcoin ETFs, they only saw about $4.5 million in outflows. Relatively minor in comparison.
Okay, that is telling. Why? Why would institutions dump, 40 times more Ether exposure than Bitcoin when the shock was supposedly market-wide?
Well, it strongly implies, doesn't it, a clear difference in how these, let's call them sophisticated investors, categorize the assets during a big risk-off event. When things get hairy, Bitcoin is still, sort of, viewed as the safer bet, the digital gold, the core holding, more resilient.
Right, the treasury asset.
Exactly. Whereas Ethereum, maybe it's the complexity of staking, maybe it's just seen as higher beta, more speculative, kind of the tech stock of crypto.
So it's the first thing they sell.
It's the first thing they jettisoned to raise cash and de-risk. They weren't quite ready to bet on the entire crypto infrastructure holding up under that kind of geopolitical stress.
And stepping back to the traditional markets for a sec, the damage there was led by tech, right?
Definitely. S&P 500, sharpest drop in 6 months, down 2.7%. But the NASDAQ, the tech-heavy index, led the rout, down 3.6%.
And that makes sense given the tariff targets.
Precisely. It was driven by very specific investor concern about what this tariff war really hits. China's critical role in semiconductors, the fragility of those global supply chains.
Okay, so chaos, fear. The sentiment index is low, you said.
Yeah, it sits at 31, firmly in fear territory. But connect this to the bigger crypto picture, and you see signs of, well, stability underneath. Total crypto market volume is still huge, $248 billion. And crucially, stablecoin volume has jumped significantly. Tether, USDT, its volume is sitting at almost $200 billion, $199.99 billion to be exact.
Right, so people are pulling out of Bitcoin, Ether, these volatile assets. But they're not necessarily fleeing crypto altogether, are they? Why not just go straight to fiat, put in the bank?
That's the key question. And the answer seems to be no, they aren't fleeing entirely.
So does this show deeper faith in stablecoins, even with all the volatility?
I think it does. This stablecoin surge suggests huge amounts of capital are just parking. They're de-risking from BTC and ETH volatility, but staying within the crypto ecosystem. That strongly indicates they plan to reinvest. As soon as the dust settles or they think the bottom is in, it's temporary flight, not total abandonment.
Okay.
And there's one more sort of anomaly worth mentioning here, DX volume to centralized exchanges. Volume hit a healthy $25.64 billion after the shock. But the fees generated, only $75.27 million.
Okay, why is that low?
Well, normally you'd expect that kind of volume to generate fees closer to, say, $120 million.
Huh. Big gap. High volume, low fees. What's going on there? Where are the trades happening?
It points towards significant transaction migration, likely. Could be a couple of things. Maybe massive trades settling on layer 2s, the faster, cheaper networks that bypass main Ethereum fees.
Or like Polygon or Arbitrum or something.
Exactly. Or it could hint at sophisticated wash trading, perhaps, or even large institutional trades settling off-chain via prime brokers. They get the volume reported for confidence, but minimize the actual on-chain costs.
Interesting. So it's a snapshot of traders getting creative to cut costs during stress.
Yeah, optimizing constantly.
Okay, so that's the financial fallout. Chaos, fear, parked funds. You'd think the whole ecosystem might just hunker down and wait it out. But that's not what happened everywhere.
Not at all.
While people were scrambling, others were actually busy laying new groundwork. There's this really positive counter-narrative emerging, focused intensely on building real infrastructure, real utility. Key players, Breeze, Lightspark, Tether, others they collaborated to launch this global developer challenge, an international hackathon called Time2Build.
It's quite a statement, isn't it? Right in the middle of the storm. And the goal isn't speculative trading tech. It's entirely focused on embedding Bitcoin payments into open source software.
Making it seamless, universal.
Exactly. And the incentives are real. $25,000 prize pool in Bitcoin, plus actual residencies at these partner companies. It's about practical utility, driving things forward, whatever the DAO is doing.
And speaking of practical utility, Jack Dorsey's company, Block, formerly Square, they're making a pretty significant move into mainstream commerce.
Yeah, this is interesting.
A new product for small businesses in the U.S. Eligible sellers can accept Bitcoin and then convert up to half their daily revenue into Bitcoin with zero fees starting November 10th.
Zero fees. That's the headline grabber.
It removes that friction for merchants, doesn't it?
Completely.
Yeah.
And that zero fee offer, it's really only viable because they're leaning heavily on the Lightning Network. That's the key piece of tech here.
A layer 2 solution for Bitcoin.
Right. It facilitates those near-instant settlements at incredibly low cost. Transactions bypass the main, slower, more expensive Bitcoin blockchain. For buying coffee, you need that instant confirmation. Lightning provides it.
But, okay, zero fees on conversion. What's Block's angle long term? Are they just eating the cost now to push adoption? Is that the play?
That looks like the classic network effects strategy. Block seems willing to absorb those initial transaction costs because the prize is onboarding millions of small businesses onto their payment rails.
Get them hooked.
Get them hooked. Once that infrastructure is widely adopted, then they can monetize through float, ancillary services, maybe lending, other financial products built around that high-volume rail.
So the goal isn't the tiny percentage on each transaction.
No, the goal is much bigger. It's about building and potentially controlling a piece of the new global financial infrastructure.
Right. Now this push for specialized financial applications, it also brings up some really deep, almost philosophical questions, doesn't it?
It certainly does. Like this development with Facet securing a Malaysian license. They're launching what they call the world's first Sharia-compliant digital bank, and it's powered by stablecoins.
Okay, targeting the Islamic financial market, that's enormous.
Right.
Like $5 trillion, right?
Huh. Huge market.
Yeah.
Colossal opportunity. But the structural requirements are where it gets tricky. Sharia compliance versus open blockchain principles. They seem fundamentally at odds.
How so?
Well, Sharia compliance involves avoiding uncertainty, avoiding interest known as riba, and critically, it requires the ability to censor or block transactions that don't meet specific ethical guidelines. Think gambling, alcohol, things like that.
Right. But open blockchains are built on the idea of not censoring. Neutrality, permissionless access, censorship resistance. Those are the pillars.
Exactly. So how do you reconcile a system demanding censorship and blocking with one built on resisting censorship and being open to anyone?
It sounds like you can't really. It becomes a sort of walled garden version of blockchain,
Yeah.
where those core principles are negotiable.
That's a good way to put it. It feels more like a fintech innovation that's cleverly using crypto's efficiency, but it has to sacrifice that core decentralized ethos to meet regulatory and ethical needs.
It serves a massive market, obviously.
Undeniably. But it shows that for certain large financial groups, that ideology of neutrality, it takes a back seat to the demands of the regulated market they want to serve. This will be a fascinating test case. How far can decentralized tech bend before it's something else entirely?
Okay, let's pivot now geographically to a region that seems to be constantly accelerating, the Middle East. While global markets were reeling from U.S.-China tensions, this region is just doubling down on AI and smart tech integration. In the UAE, for instance, Robo.ai and Changer launched something called Robot 339.
Yeah, a smart vehicle with an integrated digital wallet.
So more than just a connected car.
Oh yeah, much more. This is autonomous economics starting to take shape. That digital wallet allows the vehicle itself to make independent real-time payments.
For what?
Things like tolls, charging, maintenance, even leasing payments potentially. The car becomes its own financial agent, handling authorized transactions without needing the human driver to intervene every time.
Wow. That moves beyond just convenience, doesn't it? It's almost like financial personhood for the vehicle.
That's exactly the implication. It signals a big leap towards a truly autonomous, interconnected economy, and you can see the investor excitement. Robo.ai's stock, it's been volatile, sure, but the momentum is strong, up 500% in just months.
Because investors see this as the future.
They absolutely do. They see this smart mobility push, which Robo.ai plans to extend into robo-taxis, logistics, as the future of transport and commerce, even if the AI label might be closer to advanced machine learning right now.
Meanwhile, next door in Saudi Arabia, they're tackling what's often the biggest bottleneck for this kind of future: the talent.
Right. The people needed to build and run it all. Data Vault launched Saudi Arabia's first official data science and AI diploma.
And this isn't just another university course, is it? It sounds strategic.
Highly strategic. It aligns directly with their Vision 2030 plan and the national strategy. They're targeting 20,000 AI and data science specialists in the next 5 years alone.
20,000 in 5 years is incredibly ambitious. How do they plan to make that happen? What's the incentive?
This is the really interesting part, the commitment. Data Vault isn't just training people, they're sponsoring students from the first cohort.
How many?
100 students to start, notably 50% women, starting this November. And here's the kicker. They guarantee employment after graduation.
Guaranteed jobs.
Guaranteed jobs. And these aren't theoretical roles. They'll immediately start working on real-world AI projects.
That guaranteed employment changes everything. It basically turns it into a state-level strategy to win the global AI talent race. Takes the risk away from the student, ensures the country gets the specialists it needs for Vision 2030.
It's a massive competitive play, and it's backed by serious money and infrastructure. Data Vault is investing $5 billion just in the first phase of its net zero factory campus at EOM, planning for it to be operational by 2028.
Building the factories and the workforce simultaneously.
Exactly. It's holistic. Build the physical infrastructure and at the same time, build the highly trained local human capital needed to run the automated AI-driven future they envision. #tag outro.
This has been a really insightful deep dive. We went from this huge $19 billion market shockwave, driven entirely by a centralized political announcement,
Yeah, that tariff decision.
all the way down to these incredibly specific granular developments. Zero-fee Bitcoin for U.S. sellers, the complex ethics of Sharia-compliant digital banking, state-backed AI talent pipelines with guaranteed jobs in the Middle East. It's quite the spectrum.
The synthesis seems pretty clear, doesn't it? The volatility from these big, centralized political moves is intense. It's painful. It's immediate. Yet, that very pressure doesn't seem to lead to retreat. Instead, we see this relentless push towards decentralized solutions and highly specialized financial tech. Developers, industry leaders, they aren't waiting around for the U.S. or China to sort things out.
They're building alternatives right now.
Right now,
Yeah.
actively.
So as you process all this, think about the speed block is moving at, or how fast the Middle East is building its own talent base. Consider this final thought. Given how profoundly that U.S. tariff announcement shook the markets, are these big geopolitical shocks now actually becoming the primary catalyst? The thing that forces innovation and adoption in decentralized tech, pushing companies like Block, like Square, to build more robust, non-sovereign alternatives faster than they might have otherwise. Something for you to mull over.